Tech Trends 24/7 Leaders is a passionate podcast hosted by James P. Quinn on technology innovation. It provides insightful interviews with key and inspiring innovators in areas of corporate technology, office of the future, AI, real estate, sustainability, assistive technologies, and other emerging technologies. Tech Trends 24/7 Leaders will smartly position you where your business, life, and industries are moving for the future.
On today's episode, we are excited to have Mike Hochanadel on the podcast. Mike is a driving force in data center capital markets and is the managing director and head of all digital assets at Harrison Street. He brings 21 years of industry experience and is responsible for leading Harrison Street's digital business and defining strategy for their digital sector. Prior to Harrison Street, Mike was with JLL for 15 years where he focused on the data center asset class. Welcome, Mike.
Mike Hochanadel, great to have you on the podcast. You've been a huge part of the data center investment market for years, and really happy to have you today.
Well, thank you, Jim. It's my pleasure to be here. I'm looking forward to a great conversation, and it's good to see you. It's been a while. Look forward to seeing you in person one of these days soon.
Absolutely. Look forward to it. So, Mike, could you maybe just give us an update on the role and kind of the initiatives you've been focusing on?
Sure. So at Harrison Street, I oversee our strategy around investing in data centers and digital infrastructure. We, as a firm, tend to focus on sort of niche asset classes within the broader real estate sector that are operationally intensive in nature and supported by what we see as being, very positive underlying demand fundamentals. And so obviously those criteria, fit squarely within the data center world. And so what we've really been focused on is a variety of different things kind of across the risk spectrum. We manage capital in a variety of different buckets on both the opportunity side and more on the core infrastructure side. And so across the risk spectrum, we have been developing product in markets that we see as being kind of core, constrained markets that are, capturing an outsized share of the overall growth that we're seeing in the space. And so we're developing product across multiple campuses in Northern Virginia. We've put together an assemblage of sites in Santa Clara, and then we've acquired a large parcel in New Albany, Ohio, which is one of the markets that we've identified that we see as being a significant beneficiary of some of the spillover growth that can't fully be satisfied in both Northern Virginia and Chicago. Mm-hmm. So that's a key part of our business is developing those campuses, mostly catering to the hyperscale community and some of the other uses that kind of follow from the hyperscale community. We also are spending a lot of time focused on highly connectivity oriented multi-tenant assets. So yes. Carrier hotels are an asset class that we love. We're not the only ones, unfortunately, and so those are very competitive, and there really aren't that many mature carrier hotels that have the kind of interconnection, ecosystem that we find really interesting. But we've been successful in picking off a few kind of highly strategic assets, and we're in the process of adding a couple more as we speak, actually. Moving on from kind of pure carrier hotels, we do have a strong interest in co-location as well. Again, tend to focus on assets that have very interesting connectivity attributes. We think typically the connectivity component is what makes that kind of an environment strategic. Mm-hmm. And then I would say beyond all of those data center categories, we're also spending a lot of time focusing on just digital connectivity infrastructure more broadly. So, within that category, dark fiber is probably the category that we like the most and spend the most time on. Has a lot of synergies to the various kind of data center components that we're focused on, and can present some really interesting economics. So that's kind of where we're spending our time. I think as a firm, we're also looking to expand, beyond our North American footprint. We're looking at a couple of projects in Europe. As you know, the data center market is a very global market with much of the same customer base, sort of moving beyond the geographic boundaries.
Yeah, on co-location, maybe the relationship with 1547, because I know that when you started there, I don't think that was part of it, right? And then you guys,
I would say
the timing on that.
Yeah, more broadly, our philosophy in general, and this applies to all of the sectors where we invest, which beyond data centers, we do a lot in categories like senior living, student housing, life sciences, medical office, et cetera. And in general, we look to align ourselves with groups that we see as being best in class operators, and then generally form programmatic relationships with those operators, and seek to invest in multiple deals. So 1547 has become a very key operating partner for us, specifically around the carrier hotel segment and the strategic co-location segment. They have a particularly strong background, given some of their team members around connectivity and interconnection. And so we've been successful of kind of leveraging that experience across a growing portfolio of assets in multiple markets at this point.
Yeah, no,
kind of just thinking through the other categories that I mentioned, we're doing quite a bit of our development work in Northern Virginia with American Real Estate Partners and their data center division, which is Powerhouse Data Centers. We're working on a project in Central Ohio in New Albany with Lincoln Property Company and their data center division, Rack House. And then we've executed multiple development projects around the country with a group called Opident.
Got it. And then, you mentioned dark fiber. That's really interesting. Maybe can you just give us a little, lens on that in terms of what you guys are doing?
Sure. So we're an investor in Summit Infrastructure Group. Summit is really the dominant incumbent dark fiber provider for the Northern Virginia market. I think what we've seen over time is that, particularly at market scale, dark fiber has emerged as sort of the preferred network solution for some of the largest end users, predominantly the hyperscalers, very large operators, and potentially very large enterprise users as well. I think it provides some cost advantages at scale compared to solving for network solutions through lit services, as well as it creates some flexibility around customization, and ultimately some benefits around security as well. And what we find particularly interesting about it is at scale, across a growing data center market, it presents some interesting characteristics, almost like a market scale carrier hotel, effectively facilitating interconnectivity between the various data centers within the marketplace.
Yeah, really interesting. So, Mike, how are you seeing the market in this inflationary, high interest rate environment we're in now? It's really changed significantly over the last 6 months to a year. So, how are you navigating through that?
I think where we really start is on the demand side. Clearly, there are challenges on the cost side, on the capital market side, that are impacting any asset class, real estate or otherwise. I think what's interesting about the data center space right now, though, is we are experiencing just extraordinarily positive demand fundamentals.
Mhm.
And we believe that those demand fundamentals will persist. So ultimately, I think our view is that the challenges that we're seeing on the cost side of the equation will eventually translate into higher rates, both on the powered shell side, and in, certain markets on the co-location side as well. I think that from a capital markets perspective, you can't ignore the interest rate environment, and there will have to be a recognition that cap rates are going to go up, multiples are going to come down, and there's going to have to be a little bit of a repricing around core stabilized assets, simply just based on spreads. Having said that, I think that most people expect that rates will moderate, and certainly in comparison to other sectors that maybe don't enjoy the demand fundamentals that we see in our space. I think we still view the data center space as being the right place to deploy capital.
Right.
And I think one of the interesting things too is that a lot of the development that takes place in our sector is generally structured and underwritten around a return on cost.
Mhm.
So if you just think about the mathematical formulation there, as costs increase, to the extent that the demand warrants it, there's sort of a direct ability to pass through that cost inflation onto the end users. The one that's maybe a little bit trickier to think through is just where inflation settles long term, and how that relates to how leases are structured vis-a-vis annual increases. Starting to hear some discussion about pegging annual increases to some sort of inflation index, potentially with a cap and a floor. But all of that's very much in play right now. It's a super dynamic environment. And obviously, looks very different than it did 12 months ago around those factors.
Yeah, and with some of your projects, what about the supply chain? How is that affected in terms of timing of projects? Because, as we're in front of the enterprise side, and we're looking at, trying to compress timelines, and sometimes the supply chain issues are not really assisting us with that.
Yeah, no, I mean, it's clearly a challenge that we're all facing. And I think it's amplified by the reality that speed to market is one of the most important competitive advantages to end users. I think until you have line of sight to product delivery, it's hard to have end users, take you seriously. So I think before you even get to a point where the conventional supply chain discussions can take place, it's first really around power procurement. The magnitude of the deals that are getting done now in the aggregate are putting a lot of pressure on power distribution and generation in certain circumstances. And so I think the first step around evaluating an opportunity and the attractiveness of a development project or campus is really around securing the power and creating a specific kind of finite timeline around power delivery. That's certainly the longest lead time item if you think about what it takes to deliver a project. And then if you think about all of the components required to deliver a project and the supply chain challenges attached to each of them, it's really just a function of creating some combination of early ordering around kind of key lead time items, or putting in place strategic supplier agreements where certain quantities are procured, maybe in the abstract without identifying precisely which location or project will be assigned to. But as a way to just get well out in front of potential bottlenecks around supply chain issues across the totality of the infrastructure that's required to deliver.
Makes sense. And then, Mike, you have an interesting lens. What are you seeing? What's your read on in terms of the journey to the cloud? And, how do you think that's prevalent over the next 5 years?
I think hybrid solutions are ultimately going to be the preponderance of the approaches taken by most end users. I think the cloud is ubiquitous. It will continue to be. It will, if you really drill down into the underlying technologies and applications being supported by the cloud, the growth is going to be extraordinary. I think a lot of the growth so far has been accommodated by efficiencies at the kind of compute and hardware level. But with Moore's law sort of fully running its course within the next year or two, we're really not going to be able to have hardware efficiencies continue to accommodate the growth that we've seen. So the only way to satisfy the amount of growth that we expect to see in the cloud is with significant expansion and development. And I think from our perspective around investing in the underlying real estate, there's a physical reality to the cloud. So I think people that are maybe not well versed in what the cloud is and where it lives, think of it as this sort of abstract concept, but it lives in a physical data center somewhere. The space may not be dedicated to the underlying application or customer, but it still resides in a physical facility. So from a broad growth standpoint, I'm relatively agnostic as to whether or not end users adopt kind of full cloud solutions, hybrid cloud solutions, or go into dedicated environments, because the growth is going to be there regardless, based on the underlying technologies that need to be housed somewhere. I think that the related point is that the cloud is becoming much more distributed. And so if you think about the cloud, the major cloud players, they generally have a topography that results in very large scale campuses, some of which they develop on their own, some of which they work with partners like us. But they also have increasingly large presence in co-location facilities, serving as cloud on-ramps or edge nodes. And then they also have a presence in carrier hotels, largely satisfying, interconnection and connectivity. So I think when you peel back the onion and look at the component parts, it's not nearly as black and white. I think there are a lot of layers to these things, and the underlying real estate facilities that support all of this compute, it's much more nuanced, and there's a lot more overlap than it might seem at a very high level.
I think you're right. To your earlier point about hybrid cloud, we're really seeing a lot of people just rolling up their sleeves with that strategy. So I think that's, in terms of your business, like you said, you could be agnostic though, just because you still need the physical presence for the cloud too. So that probably serves you well.
Yeah, I think the one aspect of the cloud discussion that we do spend a lot of time thinking about that is just a reality of the way that the markets have evolved is that the customer base is highly concentrated around a small handful of very, very large users. Mm-hmm. So, that does present some different kind of leverage dynamics than you see in other spaces where you're interfacing more with retail end users.
Makes sense. So how do you look the next couple of years, Mike? I know it's hard. Forecasting is a difficult thing. But kind of like, with all, I know you guys are very diligent in terms of research and really where you think things are going. It'd be good to kind of see, what do you think for the next couple of years?
I think there will continue to be sort of an ongoing land grab and power grab in the ultra important core markets, which Northern Virginia is the most important. Santa Clara, albeit smaller, has effectively no vacancy. And then there are a handful of other markets that are sort of rising to that level of importance, Chicago, Phoenix, although Phoenix doesn't really have the same, constraints around the land side of the equation. So I think you'll see around those kind of core primary markets, continued land grab, continued pressure on pricing, but at the same time, there's just the reality of constraints that are emerging, both land availability and power distribution and power availability. And so I think the next trend that we'll start to see in the coming years is the emerging importance of sort of key secondary markets or even tertiary markets that are picking up the additional capacity. And so I think one of the early markets that this would apply to, although it's quickly becoming a much more important market, is Central Ohio and New Albany in particular. Most of the hyperscaler customers have created availability zones in that region, in various parts of Central Ohio, and so you're starting to now see a more robust environment build up around that in terms of both co-location and connectivity. And so I think there are other markets like that that will emerge over time. I think the key from our perspective, and I'm sure many others are thinking through this too, is which markets and when is the right time to take positions and invest in those markets. And there are a lot of candidates, and not all of them will emerge in this way, but just kind of thinking through some of the markets that we spend time focusing on. Salt Lake City, I would say, is kind of already emerging as one of the key markets in the West that's picking up a lot of the growth. Austin, Reno, San Antonio, Nashville. And all of them have some combination of characteristics around very strong power availability and a kind of compelling story around the composition of power generation, as well as strong connectivity and logistics relative to access to to end users and labor pools. I think the other key theme, just kind of projecting out over the next couple of years, and it somewhat ties to that theme around kind of the emergence of key secondary markets, is sustainability.
Mm-hmm.
Given
that was my next question, Mike. So thank you.
Yeah, it comes up in every conversation, so you can't ignore it. But I think just given the massive amount of growth that we've seen, and the fact that we all expect that growth to continue and honestly, probably accelerate, sustainability has to be a key part of the conversation. And so I think it probably comes in three ways. One is the mode of production of energy, and being able to develop sites in locations where you can access renewable energy sources. That's probably first and foremost, and probably the most important dimension. I think the next dimension is efficiency. This has been a feature of the data center market forever, just because of cost reasons. Obviously it pays to operate efficiently, but channeling the vast majority of power to the actual race 4 versus the environment is key. And I think increasingly water efficiency is the other dimension, particularly in regions where water is a very scarce resource. And then I would say the third dimension that's also becoming more and more in focus is sort of the carbon efficiency of the actual development up front. Again, just given the scale and pace of development, trying to both account for the carbon footprint and minimize the carbon footprint to the extent possible around the actual construction project is increasingly something that is kind of a key area of focus.
Yeah, and so do you have like somebody on your staff that just focuses on that in terms of looking at projects? So you have a sustainability stripe from day one?
We do actually. We have a firm-wide team focused on ESG across all of our asset classes. Mm-hmm. And so as a firm, I think we're fairly cutting edge in that regard, particularly from the standpoint of investment managers like us. But yeah, so we focus on every project. It ends up being a key part of our approval process to both understand the underlying implications from an ESG standpoint, and to the extent possible, working with our operating partner early on to optimize and improve the story around sustainability to the extent possible.
Makes sense. Well, Mike, we know you're super busy. Just have one last question. Both of us has really benefited from being in the data center industry. What are you doing for recruiting, and what recommendations do you have for people are looking in terms of getting this industry?
Yeah, it's interesting. I mean, I got into it 15 years ago, before it was really much of an industry at all.
Somewhat, that's for sure.
Yeah, exactly. Somewhat lucky at the time, and then at some point in time, saw the direction that things were going, saw the direction the economy was going, and obviously leaned into it and really focused my career on it for the last 15 years or so. I think the people that we're hearing from now that are interested in getting involved in the space, it's much more proactive and intentional. I think there's a lot more focus on where the industry is going. And at the same time, it's a very competitive landscape out there in terms of securing talent. So in terms of how we construct our team and adding resources to our team, we're not necessarily looking for team members that have deep industry experience. I'd rather find individuals that we see as being talented with a lot of potential, and then teaching them the basics on how the industry operates. But it is it's a competitive landscape out there. That's probably one thing that will potentially shift a little bit, as we're kind of entering a little bit of a more I guess a phase of the economy that's a little bit more uncertain compared to what we've seen over the last 5, 6, 7 years. But from our experiences recently, it does seem highly competitive, securing strong kind of quality talent that's out there.
Yeah, no, it's really, when you look at the industry, like you said, from 15 years ago to where it is today, it's really kind of amazing where it is today, for sure.
It's night and day, really across a variety of different dimensions. I think, if you think back to the mid 2000s, a 5-6 megawatt building was a reasonably good sized building, and now we're developing 300 megawatt campuses, which it was unfathomable that anybody could use that much power when you think about it through that lens back in the day.
That's true. Well, Mike, this was excellent. Great exchange. Really happy you were on the podcast. Thank you for participating. And, please, next time I get out to San Francisco and New York, please, let's get together.
Absolutely. Would love to do it. I really enjoyed being on the show, and best of luck.
Thanks. Really appreciate it. Take care.
All right, Jim.
We hope you enjoyed this episode of Tech Trends 24/7 Leaders. To learn more about technology trends, you can follow me on LinkedIn. You can also read my book, Tech Trends 24/7 and the Impact of COVID-19, which is rated a must-read book by CIO Insight. The book is available for purchase on Amazon or on our website, Tech Trends 24/7. When conducting research for the book, I was inspired to see how technology innovation was making a positive difference in people's lives.
As a result, in 2020, I founded Beacon of Hope 365. Our mission is to leverage technology to help people in need. More information on the charity can be found on beaconofhope365.org. Thanks again for tuning into the episode, and a big thank you to my entire podcast team, Lindsay Soward, Brianne Lunghammer, and Sal Forcina. See you on the next episode.